We're talking about 1099-Ks. That is the form that you get from payment card companies, payment apps, online marketplaces, all of that. They are required to send you a 1099-K if the payments that you receive for any goods and services that you sold on those platforms exceeded $5,000 for the year 2024. Now, here's the kicker. This threshold is continuing to shrink. For 2023, for example, you needed $20,000 of gross sales and 200 transactions in order to get this 1099-K. Now, the 1099-K, it's $5,000 of a threshold, and it doesn't matter how many transactions. It could have been just one transaction that was a large transaction, but you're still going to get that Form 1099-K. For this year, 2025, that $5,000 number shrinks to $2,500, and in 2026, it gets to the ultimate level of where the IRS had pegged the requirement of generating that 1099-K at $600. So it's going to really start to shift and pick up more and more people as that number drops down. Now, regardless of whether you received the form, you still have to obviously report, income from selling goods and services. But if you got the form, you really kind of have to do it because the IRS also got a copy of the form as well. So when you get the forms, a few things that you want to do right out of the gate. Obviously, check the information on the form, make sure it's applies to you, and that the gross payment number looks at least familiar. Now, remember, it's a gross payment number, so it hasn't been adjusted for any, fees. It hasn't been adjusted for any shipping costs. It hasn't been adjusted for anything. It's just the gross number. Now, what you're then going to have to do is to use your records. You're going to have to compare the gross payment amount on the forms with the amount that you actually got, how much you had of expenses of, say, the credit card processing fees, any of the refunds, any of the shipping costs, all of that then lines up against that gross amount. And then you have to report all of that as basically effectively a business that you would typically report on Schedule C. That seems to be the most likely place where to put this information for most people. It sort of depends on the type of transactions that you made, but generally for goods and services and things like that, that would be Schedule C. So let's talk through a real life example so that you can hear just how convoluted and how big of the process is to actually file this correctly based on the current IRS rules and regulations. It's a real PETA, if you will. If you don't know what that acronym stands for, then you should Google it. So I have a 1099 from the good folks at Ticketmaster. That comes as a result of, for many years, actually since the Orlando Magic first came in to Orlando, the family, starting with my father-in-law, Jack Nelson, and his wife, June, been season ticket holders since the very beginning. And these days, there's like 41 home games, and, sometimes shared between family and friends and coworkers and all of that. But then there's some games where, it's just not possible that, they're going to get used. So we go ahead and just, throw them up on Ticketmaster and sell them. That's probably kind of the easiest way to do it, or at least from our perspective. And so we did that during the course of last year. And then the total amount of the tickets sold and a handful of games still, was above the $5,000 threshold. And when you look at the 1099-K, it breaks out not just the gross amount, but then it breaks down how much you got in each particular month. So obviously, not selling Magic tickets in, like June, July, and August and September because there's no basketball games. But okay, there's some money for January, there's some money for March, there's some money for December. All of that is detailed under each of the individual months that appear on the 1099-K. So now what I need to do is to research and match up those gross amounts with every ticket I sold, what I paid for it, and then, whatever the cut was that Ticketmaster did when you resell tickets, which, their cut's pretty significant because, again, these numbers show the 1099. Now, here's where it gets crazy, should I say, bordering on insane. So I have games, right, on this 1099K that I made a profit on, right? So like if I was selling a ticket to the Lakers game, right, you bought it maybe for $200, able to sell that for $300, right? Because Lakers popular, and then Ticketmaster gets their 15% cut, so that's $45. So I'm looking at, on that particular ticket sale, I'm looking at a gain of $55. Okay, so I have to report that, and given that the gain it's going to be short term because just got the tickets at the beginning of the season, so it's not more than a year. It's a short term gain. Okay, it's going to be ordinary income, and even with that, because most of this is getting funneled onto Schedule C, that's always going to be ordinary income as well, because the gain loss concept, the IRS doesn't really like to have that applied on this. They really do view this more as a business activity when you are reselling tickets or reselling anything, whether it's Etsy or Amazon or whatever the case may be. So now I have this business of ticket reselling, I guess. So I'm going through, I'm matching things up. Okay, fine. The Lakers made money on that, so that's $55 in that particular example that we were given of income. Okay, here's where it gets crazy. So, there's other teams like the Pistons that aren't very good and aren't going to generate a whole lot of attention and attraction, and so on those, okay, bought tickets for $200. Sold them for $100, okay, because it's the Pistons, or let's just say $150. I sold them for $150, less the $25 that went to Ticketmaster, because again they got to get their cut. So on those, I actually lost money. I lost $75, but I don't get to use that because that loss, according to the IRS, does not offset the gain from the Lakers tickets, because each one of these transactions are done on an individual basis. So if you sell item X and you make a profit, you have to report that. If you sell item Y and you make a loss, you don't get to aggregate them together based on the current rules for how this 1099K is supposed to work. If you think that's crazy, you would be correct, because it's essentially the same thing, right? It's tickets to the Orlando Magic, sold one, made money, sold the other, didn't make money, but based on how the IRS code works, you don't get to offset those. I kid you not. This is okay. So this is a issue of significance, I would like to think, because it's a bit of work to put all of that together, and you have to do it on an individual item by item basis. You can't just aggregate, lump it all together. Those are the tax rules. So this one, I think, folks, needs to get cleaned up and clarified. Particularly as the threshold keeps going down, right? So more and more people are going to get this tax document. So bottom line, be very careful if you receive this form. This is very tricky territory that you're going to spend some time on having to deal with on your tax return. With that, we're going to take a break here on Dollars and Cents with Joel Garris of Nelson Financial Planning.